India Development Debate. I'm Tamanna Inamdar. All eyes are on the first GST Council meet tomorrow, chaired by Finance Minister Nirmala Sitharaman. The meet comes amidst concerns of a slowdown, increasing demands from the auto sector and others to remove them from the 28% tax slab, and very little wriggle room on revenues. So will the GST Council that consists of state finance ministers be able to achieve a tricky balancing act? Remember, the GST Council consists of finance ministers that belong to all parties and has so far managed to behave apolitically. It will indeed be a fine balancing act for Nirmala Sitharaman as she takes on this task from Arun Jaitley. To speak more on what we can expect tomorrow, I am joined now by Najib Shah, former chairman of the CBEC. Gautam Chikarmane, Vice President of ORF, also joins us on the show today. We'll speak in a little bit with Prateek Jain of PwC as well. Mr. Shah, let me begin by asking you, what do you think will be the tact? Now, there have been so many reports. Some say that the focus will be on, tax evasion and tightening of tax evasion. The focus will be on e-way bills, on electric vehicles, on the auto sector. But in your view, what do you think should be the top priority for the GST Council at this juncture?
Well, thank you for having me for the show. As you rightly mentioned, this will be the first meeting for the new finance minister. And I think she has very large shoes to fill in, because a lot of credit needs to be given to the adroit dexterity and patience of Shri Arun Jaitley, who handled the GST Council meeting thus far, ensuring that every decision was taken by consensus. So her task is cut out, and I'm sure she'll more than rise to the challenge. The GST Council itself at this point of time should be closely looking at all the business processes and procedures. So, which means that evasion is an area of great concern. Undoubtedly, in the last few months, we have touched 1 lakh plus, but please remember the deficit is high and revenue is a matter of concern. So, which means all steps should be taken to plug evasion. So, from the newspaper reports, one has been hearing of e-invoices, one has been hearing of e-way bills being linked up with the toll gates tag up. So all these are issues that I think needs to be debated and discussed. The simplified return also, which was brought into the public domain, I think will be an issue which will be discussed. And talking of evasion, I think the extension of the National Anti-Profiteering Authority also will be on the anvil for 1 more year. The tenure otherwise ends sometime little later. Centralized authority for taking care of advanced rulings and appellate tribunals should also be there, because we are having too many decisions being taken by the states which are contradictory, and I think that too needs to be looked at. So having said all that, I would think that they should not succumb to the temptation of reducing rates. I think our rates are very low. The auto sector undoubtedly is doing poorly, but it has little to do with the rates per se. There are other structural issues which need to be addressed, and I don't think they should look at this. On the contrary, we should be looking at expanding the tax base. We should be expanding the coverage of GST, which means we look again at real estate. We look again at bringing the petroleum products within the ambit of GST.
Well,
I think there is a full plate ahead of the GST Council
absolutely. There are a lot of things, and of course, remember that if you want to tune in to get the latest on what is happening in the GST Council meeting, this is the right place to come tomorrow as well. But I want to pick up on one thing that Mr. Shah said, that this is not the time to succumb to pressure on rates. Prateek Jain, welcome to the conversation. I wonder what your take on this is, because the auto sector is, blue in the face, saying that take us out of 28%, because otherwise this industry is really heading for a crash land. There are other rationalizations which are being expected as well, or at least there's hopes for them. Plus, there is the added pressure of trying to increase and boost consumption in a slowing economy.
Yes, I mean, if you see the GST collection which have been projected for 1920, it is more than 30% of what we achieved in 18-19, and I think that will be a big challenge, right? I mean, if the economy grows, let's say 6.5–7%, how do you expect GST to grow at 30%? For that, demand needs to really pick up. And while I agree with Mr. Shah that the rates per se are not higher generally than what used to be there earlier, but I think definitely there is a case for rate rationalization. And when I say rationalization, I think this 28% category needs to be now limited to very, very few products, which were initially the idea, like luxury cars and aerated beverages and tobacco, etc. I think they should definitely look at the smaller cars and the electrical vehicles, etc., where the rate should be reduced. And I think 28% category per se should be abolished other than these two few products, because clearly this kind of a high tax structure doesn't really help anyone. And the other thing is that 12% and 18% also needs to be combined to 15-16%. I don't expect that discussion to happen tomorrow. What I'm really looking forward to, however, is that till now GST Council over more than 30 meetings have been quite tactical, right? I mean, they have been responding to issues which are arising for the industry, and they should get an applause for that. But now I think this is time where they should start working on a 2-year, 3-year kind of an agenda. A few things which Mr. Shah mentioned, like real estate coming in, petroleum products, whether they eventually come in or not, and what is the time frame, that's not too material for me. What is the material is GST Council looking at forward looking for next 2 years, how should the GST be shaped up? On tax coming back, I think I have a slightly different view from Mr. Shah. I think there is a case for reduction of tax rate, and particularly this 28% category needs to be looked at.
Well, 28% must go has been an anthem for quite a few people, with the exceptions, of course, of very clearly defined sin goods and luxury items. Gautam, where do you come in on this debate? Because it's going to be a full agenda. And I also want you to bring in some perspective on the last point I made in my opening. So far, it's been quite an amiable situation in the GST Council. But we're coming off a very bitterly fought election, and with opposition parties also feeling very cornered. Do you suspect that some of that might leak into the deliberations of the GST Council, or will Nirmala Sitharaman manage to keep it bipartisan as it has been so far?
I think politics has always been there in every GST Council meeting. It was there before GST Council was even formed, and it will remain there forever. That's a reality. The politics is really about center-state breakdowns and which state wants what, etc. And I think so far we've had an extremely harmonious way, and we have come out with good responses, and the GST Council has been very proactive in attending to the problems that the rates, etc. have given. The problem is now today, if you count the 1% rate on affordable housing, we have 6 rates. I don't think that's right. That's just too much. I think we are getting into very micro rate structuring, etc., which is not the reason why GST was brought in the first place. GST was brought to simplify, and in the right now with so many rates, the first thing that needs to be done, which may not happen tomorrow, but certainly the groundwork for which needs to be there, is to reduce the number of rates. I'm not saying reduce the rate. The number of rates from 6 to maybe 3, maybe you can start with 4, cascadingly come down to 3, and which will make it extremely simple. Second thing that needs to be done is certainly real estate, fuels and alcohol for human consumption. They need to be brought into under the GST ambit. Now, alcohol and fuels may be difficult, but I think real estate, nothing is happening anywhere. The prices are going nowhere. The number of transactions in every city is flat or falling. So there is not much for the states to lose. So the political part here is that can Nirmala Sitharaman persuade the states to give up real estate and construction and allow that to be brought under the GST? I think that would be a good first step. It will also pave the way for bringing alcohol under consumption. Lastly, I think we need a simplicity. There was a very high compliance burden on the system, which the large companies were able to negotiate, but the smaller ones couldn't. After a process of give and take and several meetings, we have reached a place where a large number of mid-sized, small-sized companies are out of GST, but those who are there, and those compliances have been simplified. A note on simplification. Every time that the government has talked, the GST Council or the department has talked about simplifying a form, has actually ended up making it more complex. So the complexity of compliance also needs to be looked at. It needs to be simple. That a 10th class pass or an 8th class pass person should be able to negotiate. It shouldn't be such a humongous, such a tedious process. The online part of the backbone GSTN is now strong enough to sustain to support the new demands of GST. So I think apart from cutting the number of rates, bringing real estate into the ambit and simplifying compliances genuinely, not to complexify them further, would be the first good steps that Nirmala Sitharaman could initiate.
No, absolutely. But you know what should be the priority here? And I just want to pick up on a point that Prateek made earlier. Should compliance or simplification of compliance be a key rather than clamping down on evasion? Is it time to rationalize the taxes and the rates, looking at the state of the economy? Prateek, you made a point that that should be a priority. Najib Shah, would you agree with that? Because you seem to suggest that right now it's more important to make sure that there is no evasion of tax and the ambit is in fact made even wider.
You see, ultimately at the end of the day, while GST is a process whereby we have simplified a whole lot of taxes, we also are looking at revenue. Revenue is a factor. We cannot wish that away. So we also know that the cases detected have been humongous. I mean, we are talking of figures of 30,000 and 40,000 crores of evasion said to have been detected by the various the states and the center. Now this is not on, and after 2 years, I think we really need to look at what is prompting this evasion. Technology obviously should be the key process whereby we curb this evasion. So the e-invoices should be a major step forward for that. I also think that reduction in rates at this point of time may not be on. This is a government which has got full 5 years ahead of it. It can look at the reduction, look at the sectoral reasons for the sector not doing well. And I don't agree that taxation is going to spur demand to the extent that the industry itself will do well, because the number of items in the 28% slab is very, very limited right now. And if we are talking of a reduction of 28, we have to also simultaneously talk of bringing up the goods from 12 towards 17, 16, a mean medium rate of 16, which is not going to happen right now. Which, if that were to happen, then you can also think of 28% coming down, because revenue concerns are there. And I agree also with the other co-panelists that simplification is something which has to keep happening. I think the simplified return being suggested now with a 3-month pilot run
I'll come to you on that, Mr. Shah. But I just want Prateek to respond to the point you've made, that unless you're going to bring some items from 12 to 16, don't even think of taking out more items from the 28% bucket. Frankly, we can't afford it fiscally, perhaps. In fact, very interestingly, R.C. Bhargav of the Maruti Group, largest car manufacturing company in India today, has said that despite his industry folk asking for a cut, he says, no, we shouldn't have a cut right now. Now's not the right time.
Yes, so I'm not saying that immediately tomorrow there should be a cut. See, you see 28% was contemplated initially only on 3-4 items, right? And then it got extended to many items. I mean, refrigerators and the consumer durables, etc. And government did realize that that's not the right strategy. And over a period of time, the 28% rate has come down to 18 on many items, right? From cosmetics to consumer durables to many other items. Now the remaining items there, you have to see whether these items qualify to be a luxury or a sin item. Now a small car, does it qualify as a luxury or sin item? That's a question, right? I mean, and there are no easy answers to that. So I think they should start working on a long-term thing, that what do they want to achieve. And one other thing to reduce the evasion also is to cut the GST rate. And I completely agree with Mr. Shah when he says that there is huge amount of evasion happening, but this huge amount of evasion is also happening under excise and maybe under service tax laws, etc. Right? I mean, this is not a new phenomena. Now you have a lot of data, you have technology in place, you have all the data of transactions, who has sold what goods to whom, etc. Those data, the data is already being analyzed, and those guys are getting caught, many of them. right? So I think they have to look at the reduction of tax rate. They also have to look at some simplification, and of course e-invoicing is another sort of aspect in the agenda, wherein you need to get a pre-authentication number from the government before an invoice is issued, and I think that's a good idea. I mean, that should further reduce the evasion. The only question is whether this is the right time to introduce that, or should the government wait for some more time before it comes into play. So I think all of these things have to be looked at together. So what I am looking forward to is the GST Council only responding to the immediate issues on the ground, or the GST Council saying that now GST is 2-year-old and now we will look at futuristic, what kind of GST do we want in this country over the next 2-3 years.
That's a very important point.
Is somebody sort of looking at the long-term agenda?
No, that's a very important point, Pratik.
But yes, is somebody looking at the long-term agenda?
You can do that. You can do that if you're confident now that you're through the initial teething period where you needed a lot of tinkering and very often, in fact, to make sure things were working smoothly. My question is, are we actually over that initial hump in terms of implementation, and especially facing a consumption slowdown right now? And let me bring in Gautam over here on that point. Is it now the time to sit back and look at a long-term plan, or are there things that need to be actionable right now?
See, tinkering with taxes, with indirect taxes, which is what the GST Council does, can only take the economy so far. Today, we are facing a slowdown. My personal reading of the situation is that perhaps GDP growth will fall further. If it does, I think all energies of the government needs to be outside of GST to create an atmosphere where growth is back. With growth will come tax revenues. So I think tax revenues is a subset of a larger problem that needs to be countered. I'm surprised, in fact, I'm quite shocked, the fact that so much of 50,000 crore of evasion is happening. I thought that once that, we all did, that once the GST and network is on, everything is on technology, not only will indirect tax evasion end, but its outflow into direct taxes will also get captured. On the contrary, if we are hearing that the numbers of tax evasion is so high, 50,000 crore, there is clearly some leakage, and let me identify one for you for this panel here. About a year ago in Pondicherry, when the export credits were to be returned, the people had to take physical affidavits, physical invoices to a particular office, and it would go from table to table physically. This is in an all electronic situation. It would go from table to table until the bribery amount, which I think was 1 or 2% of the what the money was to be returned to exporters there, was captured. If this is the case, this is a nice export model for other states, for the corrupt in other states to manipulate. I think Nirmala Sitharaman needs to look into this particular thing very closely. If the GST is based on technology, if that technology is all online and every invoice is captured there, what is the need for these physical invoices other than corruption? So I think that there could be a large amount of leakages within the tax system, tax administrative system, which will be partners in crime over there. I think Nirmala Sitharaman needs to look at this very, very closely.
You know, that's actually a really good point. Pratik, you want to come in on that? For a system that actually leaves very little scope for evasion, and we know the jugaad system that is in India as far as tax evasion is concerned, there are different kinds of talents there. The loopholes have been found.
No, they have been found, but those loopholes were there earlier also. I think it is not correct to my mind to say that tax evasion is happening now and it was not happening earlier. That's point number one. Point number two, there are two important aspects, there are two important points as to why this evasion is happening. One is at a B2C level. When you go and buy a furniture from, let's say, a market here, the guy says, okay, if you want a bill, I will charge you 18% tax. And as a consumer, you have to ask this question, do you really insist for an invoice? I mean, in this country, there is a culture of non-compliance. As a consumer, how many times you would have gone, or I would have gone and said, look, you pay 18%, but give me an invoice, right? It doesn't happen very often. That's one. Second is the government, the technology is in place, but today the government does not have a mechanism to ensure that as a purchaser, if I'm claiming a credit, whether tax has been paid by the seller or not. That's precisely the model which is going to come now from October, wherein the government would know exactly how much invoice has been reported by the seller on the government portal, and the credit will be limited to that only. So if 100 rupees is reflected on the portal, I will get credit of only 100. So that will largely address this issue of evasion. And with this e-way bill and e-invoicing, you will see a significant improvement over the next few months. So I think we should not get sort of anxious on this evasion. We should keep the realistic number as far as target is concerned. If you put 30% high target over last year, there is no way, I mean, it's very difficult for you to achieve that target. So taper it down, look at a realistic estimate, give it time to settle, and then work on the long-term agenda. I think that's what I would believe the government should do right now.
You know, there have been reports that the GST targets may be rationalized as well, and perhaps that would be more reflective of the current scenario. Just to wrap up, Mr. Shah, what do you think should be the top consensus right now, even for states? And you spoke about bringing real estate and liquor, etc. They're not going to let go right now. That's for sure with the current revenue. Do you think it should still be about tax evasion or tax compliance rather than making GST more friendly at this point?
Look, everything can go simultaneously and hand in hand. To make taxpayers compliant doesn't mean the tax administration should become unfriendly. So I think technology should be strengthened to ensure that tax compliance becomes easy and put in place all these processes. Yes, I do agree with what Prateek is mentioning, that evasion was taken earlier, but remember, GST was brought in as a technology-driven taxation system which will curb and cut down this evasion. That is why the disappointment, that's why the anxiety. So I think that should also be addressed. And I also agree there should be a long-term agenda, which means real estate is not going to happen very easily. There have been discussions about taxes on lottery, which need to be sorted out. Real estate, a lot of things have been done on the construction sector in the last 2-3 meetings, but there are issues that need to be sorted out and thrashed out. The simplified return needs to be, again, I think brought to the notice of the council and debated, though because it is simple, all right, but with complex annexures. So I think the council needs to be sensitized to it, and GST needs to be up to speed to ensure that it will be able to meet the requirements of the simplified return, because that again gives everybody a bad name.
Okay. Prateek, I'll give you last word. What do you think should be the laser focus right now in the first meet? Is it maybe most important for Nirmala Sitharaman to ensure that the bonhomie and at least the workable kind of relationship we've seen in the first term and ever since the GST Council came into place continues?
Yes, it does. I think Mr. Shah mentioned this point that she has big shoes to fill in. We all agree with that. I think till now, the GST Council, all the decisions have been taken with consensus. We do hope that that will continue. So, of course, one will have to watch out for that how the equations really work, between the council members. I don't personally think that that will change a lot. Yes, there will be discussions on e-invoicing. There will be some tactical issues will be discussed, maybe the new simplified return and things like that. But as I said, I guess I would be looking at a long-term agenda from the government, and that's what will define the success of GST Council, and that will make this GST system much more simple, stable and transparent, which all of us are looking for.
Okay, let's wait and see what happens in the GST Council meet tomorrow, and of course we'll be right on top of it here at ET Now, so you know where to stay tuned. We'll take a very short break right now, but don't go away.